Please note that nothing in this podcast should ever be taken as personal financial advice.
And if you are seeking financial advice, reach out as we work with professionals in the industry. Welcome back to another episode of the Finance Bible podcast. I'm joined here by fellow co-founder of the Bible, Oscar. Mate, how have you been?
Good to be back once again, Zeke. Good to see you, as I've seen you every day this week, as every week goes, really.
Yeah, it's a bit like that now. Lockdown's coming to an end. We're pretty busy at work, and it gives us the opportunity to come in and get these done a bit more frequently. So
yeah, this week in particular, though, not sure about you, but I found it to been a pretty busy week, not just work-wise, but a bit of everything. From the Bible point of view, we've looked at getting as many new guests as possible for our listeners. So that's very exciting. We've been filtering through all the different topics and the specialists within those industries and the topics which we think, well, hence why we're getting them on the podcast. It's going to be very beneficial for everyone. So exciting times ahead, guys.
Coming up within this year, we're going to have one of the most well-known finance podcasters in the world jumping on. So that's going to be very exciting. We've also got just a casual guest, just another fellow human being, young person out there wanting to jump on, wanting to share their opinion.
I think the word is someone who's relatable to our listeners.
That's it. Yeah.
So someone who is in the same situation as every single listener we have, and just talking about his experience and what he was brought up in the school system with the knowledge of finances, and just kind of get a better idea of the typical person out there and how this podcast can actually help all of you.
Yeah, it may not be relatable to every single person, but a lot of our audience, we think this person will fit well with. And, we'll ask them a few questions like what they learned in school, what they didn't, what they wish they did. And then we'll jump into direct questioning and a bit more about finance, and hopefully you guys get a bit out of that.
And that, going back on that other booking we've got with one of the most well-known financial podcasters in the world, he's American, I believe. Is that correct? International
100%.
Guest.
We know he's American.
International guest.
Yeah, we're going worldwide like Pitbull.
So that's, two very exciting guests booked in at the moment, but we're going to keep the rest a secret for the next couple of months. Mate, without further ado, what is this week's podcast on?
ETFs and what they are, certain ones that we're following and we recommend to each other.
Well, mate, I guess before we throw it over to you, because I know you're a big ETF lover and you've got a bit of a portfolio as myself with your ETFs. I'll firstly kind of just explain for listeners out there who aren't necessarily sure of what an ETF is. So firstly, an ETF, especially when you're trading stocks on CommSec, NabTrade, whatever it is you trade your stocks on, an ETF, the example of it is, or the definition is, a basket of securities, shares of which are sold on an exchange. So this means basically an ETF is a group of individual companies in one share. So instead of investing in one particular company, such as Tesla, for example, if you invest in the NASDAQ, for example, which is another ETF, you'll get Tesla, Microsoft, Apple, all these technology companies under the one share. So your portfolio is actually diverse into a lot of different companies. So for example, if one company has a bad week or a bad month or a bad year, that company, it's safe to say, is going to drop in the price, but the other companies invested in that ETF, it's going to balance it out. So we like to say, investments, we can't really say investments are safe, but ETFs are probably the safer investments.
On the stock market anyway. So yeah, Oscar, you've explained it well there. So basically, an ETF is going to be one fund which invests in multiple shares. So, it might have, as Oscar said, Microsoft, Apple, Google, all of these big companies, Facebook and all of that. And it'll invest in all of them. A portion of the money, you invest in the fund does the investing, and then for you to lose money on that, or for the market to crash, or that fund to go down, a majority of those shares have to go down, hence how we say it's a bit safer. And a lot of people are investing into this, which invest in all the different companies, and it's a wider diversification tool.
And for all those crypto fanatics out there, good news is that we've heard on the grapevine is the ASX is actually releasing quite soon a ETF containing cryptocurrencies.
Yeah,
so that's a big...
That's a 50 cryptos?
Yeah, I think it's 50. It's a big thing in the market. Like, that's going to be massive.
Yeah.
So
that'll be good for our
always,
crypto.
this is not financial advice, but it is something to keep your eye on.
And if you're holding crypto personally, or at least one of the top 50, this could be a really good opportunity where those might go up through sophisticated investors or beginner investors in the ASX actually jumping on that ETF and boosting the crypto market.
Well, that's the thing. A lot of people are scared and reluctant to actually invest in crypto because, like we said, it is an extremely volatile market. But if you invest in, say, the crypto ETF, firstly, that reduces the volatility that crypto normally allows, and you have a bit of cushioning. So ETFs, investing as a whole isn't the safest thing, but within investing, ETFs are the safer option.
Yeah, well said, mate. Now let's jump into the actual ETF part of the podcast and different ETFs that we're actually actively recommending to each other or jumping into and investing in ourselves.
Yeah, or just following on the market every day.
Yeah. So I'll start off with some American ones, and then we'll jump into the ASX and ones that are listed in Australia. Now, even though they're listed in America, they're still really easy to get on. So you can go on a product like IG, for example, which is a brokerage platform, a trading platform, and you just search them. You pay like an $8 transaction fee each time you invest. That's for Australian shares. If they're on the NASDAQ, then you don't actually have to pay a fee.
Yeah, I do my NASDAQ investing through CompPocket. You're aware of CompPocket. It's, CommSec's little brother or sister in a way. For people who are starting out investing, that's kind of what I got into for my first investment, was actually an ETF, the NASDAQ. So there's actually no minimum requirement or minimum balance needed for CommSec Pocket. So if you want to download the app, just put as much or as little as you want into a share. It's safe because generally normal shares, the minimum in Australia is $500 you got to pay. But CommSec Pocket is, as little or as much as you want.
And I think it's a $2 transaction fee for each investment on CommSec Pocket. Probably read the PDS before you do anything, obviously, but from our experience, that's what it is.
Yeah.
IG, I think it's a minimum $450 deposit to the actual platform. And then for each share investment, I think it's $100 minimum with the $8 transaction fee on the ASX. No transaction fee for the NASDAQ. Anywhere else, I don't know off the top of my head. And it may have even changed since I last checked the PDS. So,
yeah. Mate, how do you generally find a good ETF to invest in? Is this through research, reading? What do you, how do you actually find these?
Any share or ETF or anything in general that I'm investing my own money into, I'm obviously going to do the research myself.
Yeah.
Unless I know someone else who is actively investing into it, then I may follow their advice pending they've done the research. But on that, a big note and a big thing to think about when you're investing is whoever that's telling you what to do, are they actually doing the same thing? Because if they're not, there's probably a reason they're not.
And that was going to be my other point. There's always a expert tipster. Melbourne Cup or the racing, everyone apparently during that week is an expert in punting. It's like this with investing. If people tell you this tip, this is going to go up over time, get in this now. Like Zeke said, are they really investing it themselves, or do they have, something invested into it which is personal to them?
Yeah, you're going to buy a property from someone who's never bought property before.
Yeah, so look, definitely do your research all the time. Like whenever I look into stocks or ETFs, I have a few different websites and subscriptions to different platforms. So I use those websites. We'll pop a few different ones in the link in this actual podcast, just so everyone can have a look at. Motley Fool, for an example.
Yep,
that's
Motley
a great website. Just gives you a bit of an understanding and shows you the risk as well for each investment and what they kind of think, growth, dividends, all that. So research is key with everything you do.
Yeah, Motley Fool does a free newsletter too. You've got Simply Wall Street. You can have a look at...
And they've got a good app as well, this good old Simply Wall Street.
Simply Wall Street's great. They do in-depth breakdowns on each stock, so you can follow that, read about what they do and all of their ratios and stuff if you're into that. You can actually go on the ComSec app and look at the market updates, or go on the websites and look at the market updates, look at their financials and all of that.
Yeah. And there's also, for everyone who's in Melbourne, when I was in Melbourne, in the newspaper, in the Herald Sun, every Saturday, I believe, there's actually a bit in the finance part of the Herald Sun, which actually shows you 7 different stockbrokers and their tips for buy, sell or hold of the week. Obviously, they're experienced and they're going to give you what they think. But like I said, do the research. But look, if you look at that, it's a good way to get involved with a particular company. But yeah, definitely read into it a bit more. Yeah,
and a couple more to mention. Morningstar, and a really good one actually is Yahoo Finance. I thought Yahoo went off the face of this earth about 10 years ago, but they've got their own financing now. It's actually pretty good.
Well, we need to find a platform for our listeners in Greece, because we have found that there's a few different listeners from Greece.
Yeah, and Mexico, to you.
Yeah, shout out to the Mexicans listening there. The Greeks.
Senoritas out there.
What else have we got? We got a couple from India.
Yeah, we got a few in.
Don't know how we got off track here, but there we go. Yeah. That's what happens.
Yeah, no, it does.
All right, let's get back on track like Raj said a couple of weeks ago, back on the turbulence. You got to get back on track.
Yeah, get back in that Boeing. So, mate, what I'm following from overseas, that is, on the New York Stock Exchange, is actually IGM.
Yep.
Now, that's an iShares... ETF. And iShares will probably come up a bit more because they're a really big ETF provider across the world at the moment. And they provide relatively good ETFs for people to jump on. Now, this one in particular, it goes into the expanded tech sector. All of your big tech companies around the world, they're pretty much throwing their money into. Now, that one over the last 5 years has returned about 260%, which is over 50% a year.
You'd be a happy man.
And the average of the NASDAQ, for example, is 9% per year.
Yeah.
So if you can outperform that by 41% per year...
Happy days. It's great.
You're going to be absolutely laughing.
Yeah. And that all comes down to research at the end of the day.
Yeah, that's one of the only overseas ETFs I'm actively investing in that's not listed on the ASX. So let's jump into the ASX.
Well, before we do that, mate, how do you invest into that ETF? What platform do you use?
I'm currently actually using IG, but I do know that there's a good one that you like to use for your overseas investing, mate.
I've been a big follower of stake.com for quite a while now, Zeke. The platform is very beneficial, as one of the key drivers is $0 brokerage fees.
Mate, the brokerage fees on stake.com are absolutely brilliant. So they'll hit you with $0, ComSec, $20, NAB, $11.59, Self-Wealth, $9.50, IG, $8. And other companies charge more than that.
And it doesn't stop there. For the foreign exchange traders out there, Stake charge 0% for your foreign exchange trade. That is 0%. Compared to other brokerage platforms like ComSec, charging 0.6%, as well as NAB, up to 0.8%, Stake is the place to be.
Now, jumping into the ASX listed shares, the first one I'm going to touch on is actually a beta shares one. Now, the ASX code is HACK, H-A-C-K. So Beta Shares Global Cybersecurity ETF. So pretty self-explanatory. They invest in cybersecurity stock. Over the last 5 years, they're returning about 100%, 20% per year. Again, outperforming the ASX by quite a large margin, which over time will build up and help quite a lot. Oscar, what's one that you want to touch on?
Yeah, mate, I'm invested, or I continue to look at the Aussie Top 200. So the code is IOZ. For anyone who wants to check it out. So basically, this fund itself gives people and investors exposure to around 200 of the largest companies on the ASX. So for example, some of the companies invested include CSL, BHP, Westpac, NAB, your banks in Australia, so CBA, ANZ, also, your Telstra, Woolworths, Wesfarmers, Macquarie Group, everything you hear about in the Australian ASX, this ETF is invested in it. Return-wise over the last year, it's around 28.1%. So it is pretty healthy. Like, you're going to get a bit of a nice return there. It's safe-ish, or it's a safer investment. And over the last 2 years, you've returned 10.28% and 3 years, 9.75%. So look, over the long run, you are still getting those returns. But for myself and the way I've looked at it, I think whatever I'm going to put in now, you know, in 20, 30, 40 years time, whenever I wish to take it out or just accumulate over time, I know for a fact that over time it's going to go up.
Yeah, and the funny thing is I did think they'd come back up. That's actually an iShares one as well. I did predict that they would come back up. Now, moving on to the next one is actually a Morningstar one. It's Morningstar Global Technology, which is, again, in the tech sector, and funnily enough, the code is TECH, T-E-C-H. So that one on the ASX is another one that's returned over 5 years, a return of about 100%. So again, 20% returns is more than double the average. And same thing, you know, if you're in that one and you're in all of the others we've recommended, you're going to be well and truly outperforming, or you would have previously outperformed the market fairly consistently and strongly. Now let's move on to another one that we both actually follow. Oscar, jump into that one.
Yeah, the BetaShares NASDAQ. So the code for this one on the ASX is NDQ. In a whole, it's basically the top 100 tech or non-financial companies. So for example, Facebook, Amazon, Apple, Netflix, Google. So this is all invested in there. And as everyone knows, technology is probably one of the most successful and largest companies in the world. So that's kind of where I've found this, and I'm a big driver in the NASDAQ because I see technology as the biggest driver for everything. In regards to returns, if you just compare it to what I was talking about before with IOS, the returns in this one is quite dramatic. So in the last year alone, it's returned 30.35%, which is, as we already know right now, is quite a lot and a nice return. Last 3 years, 26.89%. And for 5 years, 203%. That is incredible.
That's 40% a year. 40% year on year for 5 years.
Incredible.
That's more than 4 times the actual average return, which means, you're well and truly outperforming the market with that particular stock.
Yeah, and like the previous one I mentioned on, my mindset is invest when I'm young, keep dollar cost averaging over time, and when in 40 years time or whenever that is, when I do want to take them out or pass them down, I know for a fact that from now till then, they're going to continue to go up, go up, go up. And as everyone, we're all looking into VR these days, virtual reality. You can just imagine this space, the technology space, and how it's going to evolve over time as well. I researched this, recommend everyone do their research. We're not giving any financial advice of what to actually invest in, but between Zeke and myself, these are what we are invested in and what we keep an eye out on.
Correct, and that return is simply from following basically the top 100 companies listed on the NASDAQ. For it to be performing that well is just ridiculous. Now, the final one we want to touch on the ASX is actually a Wilson Asset Management stock, which is interesting. I didn't actually expect that they were doing all that well, but there's a couple of them that I do follow personally. And this one's actually the Wilson Asset Management Microcap ETF. So the code is WMI. Now, they obviously invest in undervalued microcap stocks on the ASX. So a little bit more risky. But it fits into my portfolio well due to the other, I hate saying it, but the safer ETFs that we're invested in. Now, over the last few years, if we go for, I think it's existed for about 4 years now. It started in June 2017 off the top of my head. Yeah. So it's actually been going for
I think it was
about 4 years. So that's quite a while now, and it's returned 90% in the 4 years. Now, in 1 year, it's returned 42%, and if you had the opportunity to buy during the COVID crash, you'd be well and truly absolutely loving life. It'd be up over 100% within 12 months or 14 months, however long it's been. And they also pay a dividend of about 3.74% fully franked. More gains for you.
Yeah, looking into dividends as well is a great thing to look at too, because Some investors are different. So some people are in it for the long run, which is perfectly fine. I'm personally in it for the long run. And some people are just in it for the dividends and the returns. So depending on, what category you are, if you want a dividend or your, growth over time, different stocks may be better for you. As we've said about 30 times, do your research and find those particular stocks, because on the research you do, you will be told, this one is in particular going to have a high dividend than, say, stock B. Not stock number B, stock B. So, do your research, and this is probably a great time to put in our disclaimer. Please note that nothing in this podcast should ever be taken as personal financial advice.
And if you are seeking financial advice, reach out as we work with professionals in the industry.
All right, guys, so next podcast, we're going to dive into it pretty intensely. It's going to be how to save years off your mortgage. So we're going to release this tomorrow as a bit of a special addition to the series. It's going to be around 10 minutes of just in-depth, straight to the point of how we can actually help you achieve that for, first home buyers who've got a 30-year mortgage around their neck, families who are still paying off their home from 30 years ago. We're going to help you find different avenues to pay that off as quickly as possible.
Yeah, as mentioned last week, we were planning on releasing that one joined with this one. We ran a bit over, got a bit interested in the ETFs, so we're doing it as a bonus tomorrow. You'll get 2 podcasts this week. And on that note, not only will it be, as I said last week, looking at how to pay it off quicker, but is it the right thing to do? Can we take advantage of it? And is there better ways we can utilize the funds? So join us tomorrow for that one. And until then, keep budgeting.
Keep investing.
And keep listening. Thank you.
Ciao.